All right, what up YouTube? You guys ready to dive into it? I want to show you guys my investing strategy on how I'm actually assets that I'm actually investing in and what assets make up a majority of my portfolio and why. But if you guys are watching this, I should be down in Miami right now filming at DecentralCon. So if you guys are at the event, you guys would like to link up, probably doing a meet and greet, going out to after parties and having drinks with you guys. So if you guys want to link up, shoot me a DM on Twitter. And if you guys know anybody that's actually at the event that would like to set up interviews, any new projects, any big up and coming projects, if you guys are really active in any communities, definitely have them shoot me a DM on Twitter. I'd love to bring their team on the show and just shoot the shit and let's dive in, guys. So let's see what degenerate things I've been doing lately. So when we talk about crypto assets, this is kind of like my 5-year 100K crypto strategy. Now, my strategies change so often, so this might change, 2 weeks from now. But I've been in the game for a really long time, been mining Ethereum since it was $2.64. You guys can check my YouTube channel and see. It took me a really long time to really realize like what was actually happening in the crypto space and how to kind of prep for like what the future could hold for crypto. We know that Bitcoin is such a dominating player and that it's going to rule the regulations. It's attracting the politicians. Bitcoin is paving the way for the rest of the crypto space. So why people are bearish on Bitcoin for long periods of time, I kept telling everybody, even when I was bearish for a point there throughout the summer, I was still saying that anytime you bet against Bitcoin for an extended period of time, it normally ends up being the worst mistake you could make. So that being said, knowing that Bitcoin is the only digital property, knowing that hedge funds can hold it, knowing that banks want to buy it, but they just don't have the ability yet. Once banks start being able to hold Bitcoin in their accounts, like soon I think you'll have a Bitcoin wallet in your Chase bank account. And when you do, and when that actually happens, whether it's Bank of America, Chase Bank, whatever bank is the first bank to actually start holding crypto, it won't be long before every single bank in the United States or every single bank on a global scale is attempting to buy Bitcoin. And Michael Saylor says when that happens, you won't be able to afford it. And if inflation goes up again next month, look out, guys. 9 out of 10 of Americans right now are wondering what's going on with inflation. They're going to start to realize that McDonald's used to be $5. It was like $12 the other day. $12 McDonald's, the dollar menu doesn't exist anymore, guys. Maybe the $5 menu by 2024. So then, as long as Bitcoin makes up 30% of your portfolio, I think it's a complete fail-safe, right? Now, being brand new to crypto, if you are not somebody that's really trying to make life-changing gains immediately, and you have a good job and you have money in the bank and you have all of these things going for you, if you don't need those degenerate gains, I guess like Bitcoin could make up 50%. The maximalists say that it should make up 80% of your portfolio, which I don't disagree with. So it's all just based off of your risk. So then I start wanting to bet on tech, and not just tech like Solana tech that's already at $200 and probably going to 4 to 5x over the next couple of years. I'm talking about, coins that I think that are going to change the space. We listened to Warren Buffett and Michael Saylor say, like, here, we'll play this video really quick.
Technologies that are dominating today, they're dominating because they're able to deliver force faster, harder, stronger, smarter. Like, if you're going to dominate, how do you deliver force harder, faster, stronger, smarter? I could think of 100 examples in history, and you tend to see those things. So if it's got the characteristic that it can be made harder, it can be made smarter, it can be made stronger, it can be made faster, there's something compelling about it. That's why digital gold is thousands of times better than gold, because you've got all those dimensions to work on. That's why the natural creature, gold is a rock, a bear is a bear, a mastodon is a mastodon. They're not getting harder, faster, stronger, smarter. They're just doing what they do. Human beings are, but only because of innovation.
So when you hear Michael Saylor talk, and a lot of people say like, oh, Michael Saylor's over leveraged with Bitcoin. Listen, guys, Michael Saylor has never made an investment into any market that he just did not blow it out of the effing water. Everything that the dude touches, everything the dude says invest in, turns into be the holy grail. And it's because the way he looks at it is in dematerializing. So for example, what Apple did with technology was it dematerialized books, right? So you were able to take information that you had to carry this bulky book around. You could dematerialize the size of that content, and now you can have an iPad that holds 100 books. So now you can transport that much data across space and time. So when things actually dematerialize things, they make things easier, right? Like the dollar dematerialized gold, right? So it made it easier for us to interact. And then we had like debit cards and credit cards, which actually dematerialized the dollar, and they made it more convenient for us to interact with the dollar. But when the government's just printing all that money, we haven't had anything that can actually maintain its value and not get depreciated by, government corruption, inflation. So what things are making technology easier, right? Like the way Google did. Google dematerialized what? How people search for things, how people find content. They dematerialized data and how data was distributed. Now you take a look at like, what is Cadena doing? Cadena is a layer 1 blockchain that's dematerializing gas, right? So what Cadena is doing is they're making it easy for you to interact with crypto on a global scale and never ever have to worry about scalability, never have to worry about network congestion, never have to worry about rising gas fees. What Cadena is doing as a layer 1 blockchain is really revolutionary. So that's where I'm like, okay, he bet on Google, right? Because Google was dematerializing things and they were making things better, faster, smarter, harder, stronger. Facebook, right? What did Facebook do for technology, right? They took over. They added a higher, superior value to MySpace. MySpace was already crushing it. We saw that what MySpace was doing for like social media and interactions between humans, right? And then Facebook stepped up and they dominated and they took it that much farther. So we take a look at Ethereum, what Ethereum's done. And we take a look at things like Solana, where Solana just being a single chain, even though they're super fast proof of stake blockchain, we see that they break. Anytime that the network gets, clogged or congested, it breaks. And I think that's why we haven't seen Ethereum 2.0 roll out, because the network's just so busy. Trying to do that on just one chain is so hard. Even with sharding and everything else like that that's going to take place, it's going to be really, really hard. So we know that Cadena kind of took what Ethereum started, they made it the Facebook of crypto, because they've added so much higher value proposition than what Ethereum was at proof of work versus where Cadena is at proof of work. It's night and day. So it's like Cadena really just picked up the torch where Ethereum should have been trying to go with that multi-chain proof of work architecture, because they would have been infinitely scalable. But that would have required them to rewrite their entire coding language from scratch, which looking back now probably would have been the smart play. And then next we were talking about like applications, like the difference between something like Bitcoin that is property, and then something like Solana, which is going to be a security, Polkadot, which is going to be a security. All of these other blockchains that are proof of stake are going to be deemed securities. Now, Ethereum right now being proof of work, definitely not a security, right? But when they switch to proof of stake, I don't know if that's going to stay true. I don't know if the SEC is going to investigate. I don't think they will, because of how they launched and everything like that. So I think that Ethereum is going to be safe. Now, Polkadot, Cardano, Solana, I'm not so sure on. But that's why I wanted to go with Flux as my third bet. Now, Flux is changing the game for Web3, because when we look at Bitcoin and cryptocurrencies and what's been dominating, we know that we need that store of value. Bitcoin does that. We know we need the coin that attracts politicians. Bitcoin does that. We know we need a coin that's going to change regulations, that people feel confident and safe investing their money in when they know nothing about crypto. And we take a look at Cadena. We know we need that layer 1 blockchain that's infinitely scalable, that's proof of work, because proof of stake it's no skin in the game, right? Like it's, pyramid scam. When the people at the top, if Jeff Bezos wants to own your blockchain, he's going to own your blockchain. Now, Flux brings that Web3, and not only Web3, they are regulatory compliant. So Flux basically filed for, I don't know what you want to call it, like a no action, I think they call it. I don't know. I'm going to have to ask Dan for the actual documents on what that actually was. But I know they got basically peer reviewed on a United States scale. And then they also went on a global scale and did it on a global scale. So they are guaranteed that they are not a security. So when the SEC does all their regulations, Flux gets on a Coinbase by the time the SEC does their regulations. When the SEC does their regulations and they deem your cryptocurrency as a security until you file proper documentation, you can't be listed on Coinbase. So what happens if Bitcoin, Cadena, Flux, and a handful of other cryptocurrencies are the only coins that get left onto Coinbase? That one play alone could be game changing. Then we know what worked on Ethereum. What took Ethereum to the next level? What's taking Solana to the next level? All about DeFi and these DEXs. So having mandatory having a DEX make up part of your portfolio just seems like a smart investment, as long as it's a DEX that's new and has a max supply. Something like PancakeSwap. PancakeSwap released more coins from February to today than CADX will release into circulation for the entire existence of CADX. People don't realize how high the price of cake would be right now if they weren't releasing so many coins into circulation. So they're rewarding people by basically minting cake out of thin air. Every time Binance chain mints one block is released, 3 coins of cake are released into circulation, and then they distribute those coins up to people for staking and rewards, but they're just putting so many coins into circulation, their burn rate isn't offsetting it. So I do 30, 30, 30, and then 5. I just recently changed. I was doing 30, 30, and 10, but then realizing that something like CADX, it's super critical. So, not dedicating 5% of my resources to that coin. And then you guys can see, like, I'm kind of like getting away from the moonshots and kind of making sure that a majority of my portfolio is in assets that I'm confident holding, whether we go into a bear, a bull, it doesn't matter. Me getting into Cadena right now, where I got into it at $20, even if it goes back down to $2, I would be like a kid on Christmas, because I would just be stacking so much more Cadena, because even if it takes 6 months, a year, which it's not, DeFi is popping off in like the next couple weeks, if not month. It just seems like a no-brainer, just smart decision making, I think. And this is where it really changed for me when I stopped chasing down coins to 100 different ecosystems, when I stopped like, okay, I need to buy this new coin because it's launching on, Kasama. I need to buy this new coin because it's going to be a parachain slot on Polkadot. I need to buy this coin because it's going to be one of the first dexes on Cardano. I should have learned my lesson for Cardano, because I went pretty heavy in that ecosystem, thinking as soon as smart contracts deployed, it was going to be like boom, 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 boom. Not to realize that not the case at all. So when I'm looking at Cadena, I'm going pretty hard on Cadena. And if their DeFi doesn't pop, man, then I'm just dependent on the next exchange listing and the next exchange listing. So I don't think that Cadena is going to fail, but I also have Flux as my backup, right? So I have Bitcoin and Flux that are already just popping, bang, bang, bang. Like Flux dropping that NVIDIA news yesterday, and that Jetson, whoo, that's going to be something. And then when we see like more companies like kind of building on top of Flux, and then to run on Flux, it's free, but you need to stand up a node. So in order to stand up a node, you need 100,000 Flux for like the big boys, right? So when these companies want to run on Flux for free, they just buy the Flux, stake the Flux, and then they can interact on the network for free. I believe that's how it's working. So I'm gonna have to dive into the whole Flux aspect a little bit more, but we know we want a layer 1. We know we want to store at value. We know Web3 is the future. We know we need DeFi. And then from there, it's just like what moonshots, NFT projects, just throwing like 100. If I have $100,000 portfolio, I'm gonna throw $500 or $1,000 at moonshots, and just, and when those moonshots 10x, what do? You sell 10%. That way you got your initial investment out. That's kind of like the strategy I go with. Anytime I'm in a coin and it does a 10x, unless it's something like Cadena or Flux for that matter, or Bitcoin, like those coins are, if Bitcoin went up and did 10x, yeah, I would take 10%. That way you're always getting your like initial investment out. That way, no matter what happens with the market, you can always, reinvest, or you can always, you just have that cash sitting on the sidelines. And then from there, it's about like these stable coins. Like you can earn 14% on something like USDC. That's huge. So just to acquire stable coins and earn 14% and then compound that to make even more and more. That's just kind of the game I've been playing, guys. I got sick of chasing these coins down to all these ecosystems. And then it also allowed me to dedicate a lot of more time and resources to doing research on just one ecosystem. So right now I'm just dependent on what's going to pop off on Cadena, and I'm going to make sure that I'm getting into the best coins as soon as they pop off on Cadena. That way I'm not missing anything. And then I'm just going to be taking those gains, taking profits. When I pull those profits out, I'm just going to be DCAing and just accumulating and stacking Satoshis and KDX and KDA. So love you guys. Can't wait to see you guys in the next video. And if you guys are in Miami, don't forget to shoot me a DM on Twitter. Let's link up. Peace.